Welcome to the Deep Dive. Today, we are definitely cutting through the noise on NVIDIA, the titan at the heart of this whole AI explosion. But is it truly the AI king? Or, are there risks maybe lurking under that massive $4 trillion market cap? So, our mission today, pretty simple, really. We're going to dissect NVIDIA's latest financials, look at the competition, the geopolitical stuff swirling around, and how the big market players are actually betting. Get ready for maybe some aha moments. We want you to really grasp what's going on with this tech powerhouse. Let's jump in. Okay, first up, NVIDIA's Q1 FY26 results. The top-line numbers, they look really strong. Total revenue hit $44.1 billion.
Yeah, that's a solid 12% bump quarter over quarter and, well, a huge 69% jump compared to last year. Just massive.
Massive is right. But the real engine, like always, seems to be their data center business, doesn't it?
Oh, absolutely. That came in at $39.1 billion. So up 10% from the previous quarter and, get this, 73% year-over-year dominant performance.
Yeah, but there was that asterisk, that big charge we saw.
That complicates the picture. It absolutely does, and this is where you get to dig into the details, right? So on the surface, you see GAAP EPS of 76 cents, non-GAAP $0.01. Might look like a bit of a slowdown, but crucially, you have to factor in this pretty hefty $4.5 billion charge NVIDIA took in Q1.
Right, that wasn't like a business mistake, was it? It was tied to those export rules.
Exactly. It was a direct result of new U.S. government licensing rules for their H20 chips going to China. They basically got stuck with excess inventory and purchase commitments because of it. So think of it less like, a crack in the foundation and more like a huge one-time regulatory cost.
Okay, so if we mentally pull out that $4.5 billion hit, that specific politically driven charge, what's the actual underlying picture? How does that change things?
Well, without that charge, the non-GAAP EPS would have been a much stronger 96 cents, and the non-GAAP gross margin, 71.3% instead of the 61% they reported.
Ah, okay. That's a big difference.
It really is. It tells you that while the charge was, substantial, it doesn't really break the long-term story for NVIDIA. It's tied to a specific external event, not some underlying weakness in demand or how they're running things. And even looking ahead, their Q2 forecast, they're expecting to lose about $8 billion in H20 revenue because these export limits continue.
Wow, $8 billion?
Yeah, but they still project $45 billion in total revenue for Q2. So the key thing for you, the investor, isn't just that they ate a $4.5 billion hit. It's that the underlying demand is just so incredibly strong. Even these geopolitical roadblocks are kind of like speed bumps.
That resilience is pretty remarkable. Okay, so given that financial strength, even with these headwinds, where are the real battles? Let's talk competition. NVIDIA's dominant, sure, but they're not playing alone. What's interesting about how rivals like AMD and Intel are trying to come at them?
Well, what's fascinating is how competitors are trying different angles. It's not just about raw speed, it's also about price performance, about the ecosystem. Let's start with Intel's Gaudi 3. Sources show it actually performs pretty similarly to NVIDIA's H100 for large language model inferencing, sometimes even better for specific tasks, small inputs, large outputs, that kind of thing.
Okay, so Intel's keeping pace in some areas, but what's their main selling point then? Where's the edge?
The real kicker for Gaudi 3 is the price performance. It delivers somewhere between 10% and maybe up to 2.5 times better performance for every dollar you spend compared to the H100.
2.5 times. Seriously.
Yeah, think about it. An 8-chip H100 system is roughly $300,000. An 8-chip Gaudi 3 system, around $157,000. And they get similar accuracy. So Intel's making a pretty strong economic argument there, especially for companies really watching the budget.
That is a huge price difference. Okay, but what about AMD? Their MI300X, on paper, those specs look wild. Theoretically better than H100 or H200, right? Like 1337 TFLOPs, 192 gigs of HBM3 memory. Sounds like a real beast.
Specs are one thing, yeah. Execution, especially on the software side, that's a whole different ballgame. The analysis we looked at basically says the MI300X's potential just isn't being met because AMD's software stack is still, immature. Not enough testing.
Immature software.
One analyst flat out said out-of-the-box training with AMD is impossible. And that really highlights NVIDIA's advantage. It's not just the hardware. It's that whole CUDA software ecosystem. That's their moat. It makes the raw chip specs almost secondary sometimes.
Impossible is strong language. Can you give us some, concrete examples of these AMD software problems?
Sure. Often you need these custom Docker images that apparently take 5 hours just to build, and you got to fiddle with dozens of environment settings just to get things running, and the real-world performance suffers. Like for BF16 GMM, a common AI calculation, The MI300X was 78% slower than the H100 or H200 in testing.
78% slower.
Ouch. Yeah. And when you try to link many chips together for big training jobs, multi-node training, the H100 is still 10-25% faster. Why? Because NVIDIA has better vertical integration, better communication tools like NCCL that let the chips talk efficiently. AMD's version, ROCm, RCCL, just isn't as developed. Plus, NVIDIA tests this stuff on, like, an 11,000 H100 cluster. AMD's R&D setup for this is much smaller.
Right, that scale matters. And we shouldn't forget Google's TPU v5P either, another big player, especially in the cloud.
Absolutely. TPU v5P is built for huge scale training, more than double the processing power, triple the HBM memory of the last version. They say it trains LLMs 2.8 times faster. They have this AI hypercomputer setup, and customers like Salesforce are seeing big speedups. So the takeaway for you here is, yeah, rivals have good hardware, sometimes better pricing, but NVIDIA's software advantage, that CUDA mode, is still a massive barrier.
Okay, so these market forces are complex. But it's not just about chips and software, is it? Geopolitics is weaving its way through everything, especially when you look at critical components like high bandwidth memory, HBM. What's the real deal with these supply constraints and the global politics affecting NVIDIA?
It's definitely a bottleneck. HBM is critical. And what's really telling is SK Hynix, one of the main suppliers. They've already sold out their entire HBM production for 2025.
Sold out for next year already.
Wow.
Yeah, and they're already finalizing orders for 2026. This isn't just a tight supply, it's demand going through the roof. Sources project HBM demand will grow like 9 times by 2025 compared to just a couple years ago. And HBM sales are expected to be over half of SK Hynix's total memory sales by then, mostly driven by NVIDIA's Blackwell and their next-gen Rubin chips. It's almost like HBM is the new oil for AI.
HBM is the new oil. I like that. Puts the supply side in focus. But then there's the demand side, particularly China, and the whole geopolitical dance. We know about that April 2025 license rule for H20 exports to China, the one that caused that $4.5 billion hit. But that situation just changed, right?
It did. Big reversal, actually. Just now, July 15th, 2025, the news broke. NVIDIA is planning to resume selling those H20 AI chips to China.
Resume, after all that.
Yeah, the U.S. Commerce Secretary confirmed it. Apparently, it's part of some larger trade negotiation involving rare earths. It's a pretty significant policy shift.
I bet that didn't go over well with everyone in D.C., given the national security concerns.
You bet. There was immediate pushback from some U.S. legislators. They're questioning the reversal, pointing out how H20 chips helped fuel the rise of Chinese AI firms like DeepSeek. One representative specifically mentioned that connection, but here's the interesting part. Even though these H20s are less powerful than the chips NVIDIA sells elsewhere, thanks to earlier restrictions, they're still in high demand in China. Why?
Let me guess. CUDA.
Exactly. They plug right into NVIDIA's industry-standard CUDA software tools. That ecosystem is just so sticky. So what this really shows you is how deeply intertwined chip supply, global politics, and corporate strategy are. Creates huge challenges, but also these unexpected twists and opportunities.
Okay, so with all these moving parts, the finances, the competition, the supply chain, the geopolitics, how are the really big investors, the whales, actually playing this? Who's betting big on NVIDIA, and is anyone betting against it?
Right, let's look at market sentiment through the lens of the big holders. If you check the Q1 2025 13F filings, that's where big funds disclose their holdings. Just 5 firms controlled nearly 6.6 billion NVIDIA shares. That's like 27% of all the shares out there.
27% in just 5 hands. That's a huge concentration. But how much of that is real conviction versus just index funds having to buy?
That's the key question. A lot of it is index tracking. Take Vanguard, the biggest holder. 2.19 billion shares, almost 9% of the company. BlackRock is right behind them, 1.9 billion shares, nearly 8%. For them, a huge chunk of that buying is just index fund mechanics. NVIDIA gets bigger, its weight in indices like the S&P 500 goes up, so Vanguard and BlackRock have to buy more to match the index. It's less about making an active bet and more about math.
So they're kind of forced buyers riding the wave up.
Yeah.
But not everyone's a passive index tracker, surely.
Exactly. Contrast that with Fidelity. They run huge active mutual funds. Now, they still hold over 1 billion shares and have massive unrealized gains, but interestingly, they actually trimmed their positions slightly in Q1, down about 0.24%.
Trimming slightly. Interesting signal.
It is. It makes you wonder, will other active managers start taking profits if the momentum slows down a bit? We also see State Street and Geode Capital Management as major holders, and likely with a lot of index-driven buying involved.
Okay, that covers the big longs. What about the other side of the trade? The shorts. Are the bears out there, or is everyone still bullish?
Well, if you look at the short interest data from the end of June 2025, about 243 million shares were shorted. That sounds like a lot, but it's actually only 1.04% of the total float.
Only 1%. That's pretty low, isn't it?
Very low. Generally, that signals positive sentiment. Not many people are actively betting against the stock right now, and the days to cover is just 1.0. Means it would only take one day of average trading for all the shorts to buy back their shares if they needed to.
So, not much share pressure overall.
Not really, although you do hear reports that some hedge funds are increasingly betting against big tech names like NVIDIA and AMD, maybe as a hedge or a broader market call. But the actual short interest percentage for NVIDIA itself remains quite low. So for you, the key is distinguishing between that passive index money and the active bets, and seeing how low short interest reflects generally positive sentiment for now.
Right. And beyond just the trading and sentiment, NVIDIA is really focused on embedding itself everywhere, building out this global AI infrastructure. It's more than just selling chips now. It seems like they're creating entire ecosystems. Are we seeing big commitments to this vision?
Oh, absolutely. The scale of adoption is pretty stunning. Take a company like Iron Limited. They just bought 2,400 of the new Blackwell B200 and B300 GPUs. That's about a $130 million purchase.
$130 million.
Just like that. Yeah, and that expands their NVIDIA fleet to around 4,300 GPUs total. Plus, their facility up in Prince George, it's designed to eventually hold over 20,000 Blackwell GPUs. So they're building with a lot of future expansion in mind. It really shows the real-world demand for AI cloud services built on NVIDIA's latest tech.
That's a massive build-out. And it's not just individual companies, right? NVIDIA seems to be partnering with nations now to build these AI factories.
That's the bigger picture, exactly. They're forging these strategic partnerships globally. Look at Humane in Saudi Arabia, part of their public investment fund. They're building AI factories, starting with an 18,000-chip NVIDIA GB300 Grace Blackwell supercomputer.
18,000 chips, just to start.
Right. And the Saudi Data and AI Authority, SDAIA, they're deploying up to 5,000 Blackwell GPUs for their own sovereign AI projects. It really makes you think, how will this reshape national capabilities, the whole AI race globally? We're also seeing deals with Aramco Digital, Foxconn, even the government in Taiwan.
It really sounds like Jensen Huang's vision, his whole mantra about AI being essential infrastructure, is actually happening.
It seems to be. He keeps saying AI is like electricity, like the internet essential infrastructure for every single nation. He points to AI inference token generation. That's basically AI usage surging tenfold in just 1 year. And he predicts that as AI agents, these AI assistants become common, the demand for AI computing is just going to accelerate even more.
So it's not just selling shovels in a gold rush anymore.
No, it's like they're building the actual mines, the railways, the power plants for this new AI-driven industrial revolution. What this really shows you is how NVIDIA is moving beyond just chip sales. They're becoming part of the foundation, shaping national AI strategies and cementing their role for the long haul.
So wrapping things up, we've really peeled back the layers on NVIDIA today. Looked at the strong, resilient earnings, the competition trying to chip away, the tricky supply chain and geopolitical factors and how different investors are playing it. It definitely seems like despite the challenges, NVIDIA's strategy and its core tech are still driving incredible demand.
Yeah, that strategic integration is so powerful. We saw Intel has a price argument, but AMD's software issues really highlight NVIDIA's ecosystem strength. And then you have HBM supply and global politics constantly throwing curveballs, like that China export reversal.
It leads to a really interesting final thought, doesn't it? As AI truly becomes this essential infrastructure everywhere, how does this play out? You've got the open source pushes maybe from Intel on price or AMD trying to catch up on software.
Right, versus these incredibly powerful, vertically integrated ecosystems like NVIDIA's CUD moat. Which approach ultimately wins out in shaping this next industrial revolution?
And crucially for you, the listener, what does that long-term competitive dynamic mean as AI becomes totally ubiquitous? How should you factor that into your thinking, your portfolio? Lots to consider there.